Outrageous claims.
Керуючі предсказання.
Шокуються прогнози.
Previsioni sorprendenti.
Meghökkentő hírek.
Prédictions surprenantes.
Dramatiska forutsigelser.
Las predicciones de mercado más sorprendentes.
Welcome to Saxo Bank's Outrageous Claims for 2010. Every year, Saxo Bank's chief economist, David Carswell, and his team put together 10 outrageous claims that paint a picture of the unlikely events that could happen during the next 12 months. David, in your introduction to the outrageous claims, you say that you don't necessarily expect them to come true. What's the point of making claims that might not come true?
An outrageous claim in the Saxo Bank perspective is something that is unlikely to happen, at least according to market consensus, but where we believe that the chance of these unlikely events and high impact events of happening are somewhat higher than what the market is believing.
Okay. In the 2009 claims, you predicted oil down to $25 a barrel, the S&P 500 down to just that 500. And it didn't quite work out that way, but were you surprised by the way the economy recovered from March?
I have to say that we were not surprised to see a rally from March, but we would have expected the market to turn lower again. And so we have been surprised, especially during mid-year, of how big an impact the quite unprecedented stimulus packages and monetary stimulus to the system have had. So we were surprised about that, yes.
Okay. How should people use the claims? Can they use them on a daily basis? Is it more of a strategic way?
I think it's in a big perspective, looking at how one's portfolio is constructed and thinking through how the events that we are putting out here in the outrageous claims could actually have an impact on one's portfolio.
So if we turn to the first of this year's 10 outrageous claims, you say that bond yields could reach 2.25%.
We still believe that deflationary pressures are quite apparent, and the bond market so far has been quite reluctant to buy into the growth story, and because they are forced to have a longer term view, especially on the long maturity bonds, and actually we are relatively close in the sense that the bonds should only rise about 10 figures for us to get to that yield.
Okay.
So,
in terms of volatility, you say that VIX will end up at 14.
trading ranges are becoming narrower and narrower, and implied volatilities in all kinds of assets, also in the FX market, are edging lower by the day. And it more and more looks like it's 2005 or 2006 again, where the exact same thing happened. We think that before we begin to see this blow-off phase, we'll see very compressed volatilities in the market.
Okay. Chinese currency, the renminbi, you think a devaluation of 5% against the US dollar?
Everybody is saying that the Chinese renminbi will be revalued after pressure from the US. But if you look at the immense spare capacity of the Chinese economy, they don't need to revalue their currency. On the opposite, they actually should be devaluing it in order to be able to use this spare capacity.
Moving on to another Asian currency, the yen, against the dollar, you say around 110?
Yes, I mean both. The dollar looks undervalued by now, and actually so far in the beginning of December it looks like the downtrend is in danger of reversing in the dollar. The yen has been relatively strong, and I have to say that's without a reason, because the Japanese economy is definitely not doing well. They have an excessive debt burden, they have a very fast aging population, and and they have deflation as well. The Bank of Japan will be having a very lax monetary policy for the next many quarters, if not years, and that is bound to have a negative impact on the yen. So that's why we're saying that dollar yen could go to 110.
Mm-hmm. But staying in Japan, you also say that the TSE, the small index, will rise.
Yes.
By around 50%.
We have to say that small businesses in Japan look very cheap by now. Their price book ratio in the TSE small cap is 0.77. And this is actually an index which is containing only 12% financial stocks. So usually in this market at least, you can see very low price book ratios, but only or primarily for financial stocks that are in trouble. And that is not the case for the TSE small cap index. And that's why we're saying that although we have problems in Japan, and some of them are really big, the small caps there have a relatively global focus, and they are situated in a very interesting region, and they might be very able to get out of these doldrums quite rapidly.
Okay. Turning to the US now, you say that there's a possibility of an angry American public forming a third party.
Yes, I think we're seeing that the approval ratings for both parties and also the president are dropping quite rapidly. A lot of Americans are really unhappy about how much money is being spent to bail out all sorts of incompetent financial institutions, and all the fiscal stimulus packages and so on and so forth. Americans are not too happy about this. I think they feel that something is really wrong, both in the economy and also in the political system. And that's why we're saying that although the American electoral system is favoring a two-party setup, we could actually see a third party coming now because of the immense discontent with the political system right now.
Yeah, okay. And also, talking about the political system, the US Social Security Trust Fund is going to go bust.
Yes. That sounds very dramatic, and perhaps it is, but only in a longer-term perspective, because what is happening in 2010 is that with a statistical or you might say actuarial certainty, 2010 will actually be the first year where the general fund, meaning the fund that is taking care of the federal budget and federal expenses, will actually have to pay into the Social Security Trust Fund, or except if they hike the FICA or the Social Security taxes or contributions from employers and employees. So it will need a bailout for the first time in decades really, because there's really no money or assets set aside to pay for the retirement of Americans. The money that has been paid into the so-called Social Security Trust Fund is simply not there. It's just been spent all along. So that's why we're saying that it'll go bust. It'll need a bailout if they should meet their liabilities in 2010.
Yeah. But on the other hand, the US trade balance, you're saying, is going to turn positive again.
That could happen in 2010.
Yeah.
We're already seeing a quite dramatic improvement of the trade balance, and American exporters are taking advantage of the low dollar and low cost in other countries. And we are also seeing that the job losses in manufacturing are not as bad as they used to be. And this will be something going forward that will help the American economy to recover.
Okay. Finally, at number 10, into commodities, we've got sugar dropping by 1/3.
Yes. Sugar is relatively high by now because of two problems. First of all, a drought in India, which is one of the big demanders of sugar, and also excessive rain in Brazil, which has been ruining the crop. But now we're seeing a lot of new plants of sugar canes, and at the same time, some of the demand for sugar is actually on the retreat because of high ethanol prices, and therefore the ethanol contribution to the gasoline, or the part of gasoline that is coming from ethanol, is decreasing in both Brazil and the United States. So the demand is actually reacting to the high sugar prices by now. So we think that it could drop by 1/3 in 2010.
Okay. Well, those were the 10. Thanks for that, David. We'll have a look in the rest of the annual outlook to see what you say about 2010. Thanks a lot.